Let's get an outlook for commodities in the year ahead. We are joined by Reid I'Anson, economist at Kpler. Reid, thank you very much indeed for joining us. Happy 2025. Can we start off with oil? You are generally cautious or even bearish on crude, at least in the near term?
Yeah, that's right. Generally this year, we have an expectation that oil prices will average out to roughly $72 per barrel on that Brent spot contract. And that is significantly down from last year where we were averaging north of 80 per barrel. The simple fact is that supply right now is outpacing demand, especially through the first half of this year. And even when you look at spare capacity, say, across the OPEC organization, there's a lot of available oil there if we do need it in the future. And so the market, of course, has rallied a bit into early this year. But generally speaking, we think that there is real downside to oil this year.
Real downside, and that is simply a persistent supply glut?
Yeah, exactly right. And you build in the fact that Chinese demand in particular is really starting to slow now, right? Last decade, Chinese total product demand was adding 500 to 600 KBD per year. That outpaced the US, India, and Europe combined. But now we're starting to see that Chinese demand profile peak out, right? And so there's a big question on the demand side. Who's going to replace China? And that question's a bit unclear. And so you have this situation where supply is pretty elevated and demand growth looks to be slowing, especially out of China.
What about President Trump's influence on the oil market? Let's leave out tariffs because we really don't know what's going to happen in that area. Will he be likely to step up aggressive action on Iran, potentially cutting off some of their crude?
Yeah, that's probably one of the bigger bullish stories for the oil market this year. We see Iranian crude exports likely coming off the market to a degree of, say, maybe 500 KBD by the middle of this year. However, the offset is we do think that Trump will be pretty aggressive in pushing OPEC to fill that supply gap. If prices start to creep higher, especially towards that $80 per barrel level, I think at that level, you'll probably see Trump really get aggressive, start tweeting at OPEC, the kind of stuff that we saw in his first administration. And keep in mind, he's really going to be keeping a close eye on U.S. gasoline prices. I think the Trump administration realizes that U.S. consumers tend to view inflation oftentimes through that gasoline price. And so he's going to be very focused on trying to keep that lower than, say, what we saw under the Biden administration last year.
We've seen, can we switch to natural gas? We've seen prices moving up, obviously, with these brutal temperatures across much of the United States. What's your outlook for gas as a whole, though, in 2025?
Yeah, obviously, we've gotten an uplift into this year. We saw Henry Hub test that $4 per MMBTU level. Obviously, last year was a pretty weak year for prices, averaging out at around $2.40 per MMBTU. We do think that there, obviously, we got a strong start to the year here on the weather side of things and on the demand side of things. We will see increased export capacity this year as well. We think that these factors will help to pull Henry Hub higher on an average basis, say maybe to 3 or 3.10 per MMBTU, again, up from 2.40 last year. So maybe a bit of a positive story in the Henry Hub side.
Maybe we could put up a 5-year chart. For years, there was overproduction in the United States, but the market seems to be shaking off those concerns.
Yeah, it's kind of interesting to watch. Even when you look at U.S. inventory levels right now, they're well above the 5-year average. But I think there's a lot of hope that this LNG export infrastructure can continue to come online, and you start to see more convergence of Henry Hub against that TTF or JKM benchmark globally. And of course, TTF and JKM are trading well above Henry Hub. So as you build out more infrastructure, you would likely see that Henry Hub price tick higher. And that's kind of what we're expecting is going to happen this year. And of course, with Trump coming into office, you're going to see a lot more approvals of additional export capacity over the next several years as well.
I wonder, will it turn into a bit of a political row? If gas prices for domestic consumers in the States go up excessively, will people start complaining about LNG exports?
Oh, absolutely. I think it's going to kind of be an interesting balancing act that we see, especially 2 or 3 years out as a lot of additional capacity comes on the market. I think what you'll see is Trump really will push domestic producers to pump more natural gas. But again, we're not in that moment now. But I do think that, as you say, that could be a political issue down the road for sure.
What about iron ore? You do see pressure on iron ore this year?
Yeah, so the last couple of years, Chinese smelting demand has managed to maintain at relatively steady levels, despite the fact that construction starts in China have collapsed. And they've really filled that supply delta by exporting a lot of steel products abroad to places like Brazil and India. But we think that that's going to come under pressure this year. You're already seeing a lot of tariff implementation out of these countries in order to protect their own domestic smelting industries. And so I think that will put pressure on Chinese iron ore demand this year. And so, we see prices at maybe around $100 per ton this year, or even a little under that level. Last year, we were averaging at 110. So again, a pretty bearish outlook for iron ore this year.
It's interesting, there are doubts about Chinese economic growth. I'm not sure if you saw that story in the Wall Street Journal that Xi Jinping, the Chinese leader, had an economist uprated or reprimanded because he questioned the government's growth figures.
Yeah, it's interesting to watch. Obviously, there are questions around, what the Chinese are reporting right now, but I think it's important to focus in on the fact that, if China is going to kind of get out of the current situation they're in now, they need to stimulate consumers, right? They've been an investment-led economy for a long time. They need to transition towards a consumption-led economy. And most of the stimulus that we've seen up to this point has really focused in on the monetary side, which stimulates investment. But if they're going to get out of this current situation they're in now, we need to see more consumer side stimulus from the government.
Reid, thank you.